Good morning. Welcome to the trade setup right here on BQ Prime. I'm Neeraj Shah, and it's an active morning of trade. We're coming off of a rather eventful weekend, and we'll talk about it at the fag end. But yes, uh, the 70s, yeah, in some sense, we've completed the 75th anniversary of the Indian independence with celebration throughout the country. But let's take stock of the market. The global news flow, stocks have ticked higher on big tech bounce as well as the yields fall. The US stock market breadth, though now, apparently is the most overbought since June 2020. That tells you a story or two about how much the broader markets in the US too have bounced back. What I haven't given as yet is that amongst all of this thing, China's military said that it has held fresh patrols around Taiwan to fight back against another US congressional visit. Oil has extended losses as traders weigh the China outlook as well as Iran supply. In that, Aramco has posted the highest profit of any listed company thus far. Commodities have cooled off. So iron ore to copper have dropped on signs that the China economy is still struggling. As I said, oil has extended its losses already. Crypto has cooled off. The rally's cooled off a little bit as the Ethereum upgrade optimism has lost steam. And in India, the rice crop has suffered setback as patchy rains have reduced the plantings. Do watch out for the rice companies. You never know, they might react to this piece of news as well. So the US markets did reasonably okay for 2 days on a trot. Now you would have to argue comparatively, if you take a consolidated performance of yesterday and otherwise and Friday, it's kind of an okay move. Yesterday too, about 0.5% or higher for most of the benchmark indices. The other cues are more important. The yields have come off a little bit. Remember, they were nudging 2.85, 2.9. Now at about 2.79. So a bit of a cool off there. The dollar index is about, well, at 106 or circa around that level. Like I said, Bitcoin is cooled off a little bit now below 25,000 after nudging 25,000 yesterday. The SGX Nifty net viewers indicates a start which could be, uh, I mean, even if you take into account that the index was shut yesterday, you have to argue that we'll have a steady start, even though the Asian screen is looking slightly patchy. So we'll have a kind of a steady start in the session today. You would probably have to anticipate that. Now, what's the trade setup? I think Nifty gained all through last week. All the 4 sessions in last week's trade, there was a gain notched, and therefore this is now the 4th week on a trot that we've had the index gaining. The global view, as I said, never mind this morning's skepticism, is still largely positive, and the oil and yield cool off definitely helps. For this week, for this week, the FOMC minutes as well as Fed's projections of inflation and the recession are likely the key monitorables. The EV ecosystem players, building material companies, as per my conversations with some market experts and dealing rooms, seem to suggest that these are the ones that are part of the preference list. EV, you can understand why, right? Mahindra and Mahindra has unveiled 4 or 5 new things. There is Ola, Bhavish Agarwal, who said that they will launch a made in India electric car by 2024. So frankly, if you look at the EV ecosystem today, it's a buzz. This was known by the reviewers. Keep in mind that both Ola as well as M&M will have this launch and unveiling and this commentary. So therefore, it's not new news, but there is some merit to keeping this in mind. So watch out for the EV ecosystem in the session today as well. Viewers, aside of that, just keep in mind that if you look at, we're done with the trade setup. Now, aside of that, just keep in mind, viewers, that we have to also watch out for the fact that there has been a substantial rally, and a bunch of quant indicators back home as well are saying that maybe there could be some bit of slip before we continue in the merry ways. So most expert notes that I read seem to suggest that yes, if we break above 18,000, it's great news. But whether that will happen or will there be a slip is the question. Like I said, quant indicators definitely indicate that there should be some bit of a downtick. Let's wait and watch if that happens. Bears have had to eat their words in the last few days for sure. Let's talk about stocks to watch. I'll start off with Restaurant Brands Asia, despite the fact that they had a net loss. But on a QOQ basis, revenues up 22%, EBITDA up 44%, margins expanded to 6% versus 5%, and the net loss narrowed to 50 crores versus 81 crores. I think a bunch of things went right for them. The SSSG growth, SSSG of 66% YOY was in line with expectations, but 66% is a really strong showing. The average daily sales, or ADS, was up to 120K, with July ADS at 131K. Now that's a remarkable uptick compared to what was the case even YOY. So somewhere out there, all of these QSR players have seen a good run. Watch out for, and the gross margin expanded to 66.4%. So that is actually also very, very good. Hero MotoCorp, lower than expected revenues and margins led to a EBITDA miss. The company said that the marriage season in the first half calendar year 22 witnessed a healthy retail pickup. The company said that the benefit of the softening metal prices should flow through in the coming quarters, and it intends to launch its first EV in the festive season. Frankly, the commentary is not too bad from Hero MotoCorp, despite the fact that it was a big miss on the results. Difficult to say which way the stock will react. Purely numbers, not good. Big miss. Commentary, fairly optimistic, fairly positive. Let's wait and watch. ONGC had a splendid set of numbers, and MK's note suggests that they are taking some note of that. So they are retaining their FY 23-25 earnings. They rolled over to September 23 estimate numbers, and they've raised the September 24th estimated DCF SOTV by 3% to 190. They are saying that while windfall taxes would lower earnings from the Q1 highs, valuations nevertheless are attractive, and they reiterate their buy call on ONGC. So, well, do watch out. It may react a little bit to its numbers. What could react to its numbers is Z Entertainment. Revenues at about 1845 crores, up 4% YOY, but down 20% QOQ. EBITDA margin collapsed really, 12.8%, down 813 basis points YOY, 503 basis points QOQ. PAT down 49% YOY, 41.5% quarter on quarter. The adjusted earnings for Z were at decadal lows, and are lower than even the COVID quarter. That tells you a story of what Z is going through. Never mind the fact that it is in a value zone. And yes, I know, that a bunch of very smart people are now starting to buy at these valuations in the hope that the Sony merger will bring about some value creation. I would suspect, one, that it's a hope trade. Two, it's a trade which is out some months. It's not happening immediately. So keep that at the back of your mind. Sun TV is the other one. Revenues at 1194 crores. Think of it. Z did so badly. Sun, reasonably okay, right? Revenues up 47%, EBITDA up 54%, EBITDA margins up 288 basis points YOY, PAT up 26% YOY. Yes, Sun had some benefit of the IPL franchisee as well, but be that as it may, the numbers for most of the media companies looking much better than Z Entertainment. I would suspect that Z may have a negative reaction today. Apollo Tires, revenues up 30%, margins at 11.6 versus 12.3, and we know from the commentary of most companies that the margin pressure, even if it's really severe in quarter two, is starting to ebb. So quarter three onwards, the margin pressures will improve. The net profit up 48%. Net, you have to admit that despite the fact that it is a YOY comparison and therefore it was a COVID impacted quarter the last time, it is not a bad quarter per se. But yeah, compared to estimates, and some estimates thought of a much higher number as well, by the way, remains to be seen. Astral, well, not what you expect from Astral. So the numbers left a bit to be desired. Revenues up 70%, which is very strong. EBITDA margins came off a little bit, PAT up just about 20%. They mentioned that the Q2 margin will be likely similar to Q1 due to the high cost inventory. And they expect that the falling commodity prices will boost demand in the coming quarters. The issue with Astral is that it's such an expensive stock that it needs to put all its feet right. Somehow this time around on the volume growth and the revenue front, very strong. The margins left a bit to be desired. Let's wait and watch. We'll be talking to the management at about 11 a.m. today. So that could be an interesting one. Some other key stocks in news include Mahindra and Mahindra, which has unveiled 5 electric SUVs under the XUV and the Born Electric brands. Frankly, if you look at the video on Anand Mahindra's Twitter handle, you would feel like you want to own that car. I'm presuming that these are made in India, and it's a great moment, right, per se, from an Indian perspective, to see an Indian company coming out with models which look very soft, Frankly, M&M's XUV series, the recently launched ones, are also looking amazing. Thar is looking amazing. They've turned a corner, frankly, when it comes to producing good-looking cars. They are doing it very well. And the stock has had a buoyancy by virtue of all the things that it is announcing around the EV ecosystem piece. This one is no different. Watch out for M&M. DFM Foods is the other one. Advent International has proposed the delisting of the company. The only pickle that I have with this one, the stock was up on an upper circuit, I think, in Friday's session. Somebody knew of this, and therefore some bit of the movement is in the price. It'll do well more. I think it'll be higher today as well. But just keep in mind that it was already on an upper circuit. JK Cement EBITDA margins down 600 basis points due to increase in cost that may hurt. GN Axle revenues up 25% quarter on quarter, led by strong volume growth in the domestic tractor business. So this may do okay. Watch out for CCA approvals that came in for Ambuja, Ambuja and ACC because of the Adani. That's gotten the approval for acquisition by the Adani Group, or the HDFC Bank merger has gotten the CCA approval. And in IIFL's case, the home finance stake acquisition by Adia has gotten the CCI approval. What I haven't mentioned here is the NCLT approval for the pharma operations demerger of Piramal Enterprises. So that's the other one that could be in focus today. Watch out for Piramal, may have a reaction. Some key brokerage calls. I would reckon MS on Godrej Consumer is the principal one. They're double upgrade to an overweight from underweight. So watch out for this one. Revised price target of 1101. A very strong bullish note there. Astral, it's been cut to add from the rating has been cut by Axis Capital, price target of 2104. LIC has been raised to outperform at Macquarie with a target price of 850 rupees. Frankly, a lot of you might have LIC, so do watch out for this one. I just want to share with you that Credit Suisse came out with a note as well. They've said that LIC is hinting at evolving competitive dynamics in guaranteed product space. They remain underperform on ICICI Prudential and neutral on SBI Life. That's about their coverage. Not much, I think, on LIC from Credit Suisse at least. A lot of you wanting a global view. I mean, Michael Burry dumping his holdings. What's your view on the market move is what somebody, Suresh Kumar, has asked. Suresh, good morning to you. Very difficult for me to comment on, therefore, what will happen to the US markets. But I thought I could get you the Citi Global Markets view, because that will give you a hint or two about how some of the others are thinking as well. So Citi's echoing some of those thoughts, right? They are saying, though, that the bullish flows have returned to US stocks. And significant, their observation seems to suggest that significant new long positions were added in the futures after mild inflation data last week. The positioning, according to them, is now marginally net long in US equities, as more shorts have been unwound and new longs have been added. And net short positioning on Euro Stocks 50 has closed and net positioning is neutral. Now, viewers, remember a few weeks ago, BofA Fund Manager Survey suggested extreme pessimism, as a result of which they had said that because of so many shorts in the system, there will be a bout of short covering in the markets will move higher. Now, Citi's views seem to suggest that the net short position is unbound. However, new longs have been added, and that could aid sentiment. For now, the sentiment in equities remains buoyant. Michael Burry, I'm no one to comment on somebody who's the stature of Michael Burry, but per se, his move seems to suggest that maybe some bit of greed is getting priced in. Maybe that's something you want to watch out for. Outlook on FMCG in the coming quarter as well. Select brands or select brokerages have upgraded the earnings estimates for FMCG companies, believing that consumers in general, direct to consumer in particular, to my mind, really the PVRs, the RBAs, the Westlifes of the world, the Devyani Internationals of the world, have probably had a really strong show. In FMCG companies' case, what was hurting them was the margin pressure. It will stay in Q2, then come off in Q3 onwards. And therefore, from that perspective, there could be sustained earnings growth for the year at large. So therefore, that's the view on that. Listed AMC players, a bunch of people are now saying that they have come in a value zone. Balram, I'm no one to comment on whether the stocks will do well or no, but the last few brokerage notes, as well as the conversations that we've had with market experts, seem to suggest that AMC players and brokerages could have a good run. Watch out, if you log into the MK conversation that we've had last week on Friday, at the fag end, Krishna Kumar Karwa says that from a 5-year perspective, that one space that he bets on is this whole AMC come brokerage space. He believes that's where maximum money and maximum wealth could be created. You want to hear that conversation, of course, to understand his whole rationale. If you believe in that and if it works for you, maybe you can make an investment or two there. I'm the one to comment really. But just before we log off, a final homage to the great Rakesh Jhunjhunwala, the great investor that he was. The beauty about this comment is that he says, I mean, forget all the stuff that he says about investing. He's saying that he believes innately in India's skills, its democracy, and its people. He was such a big India bull. He's saying and people are underestimating what all of this can do to India. And his India bullishness probably helped him in being a strong India conviction Indian investor, which probably created wealth for him. As they say, if you are an investor, you can't make wealth if you're not bullish. If you're a trader, yes, you can be both. If you're an investor, you got to be optimistic per se. So this is something that everybody should remember per se. And our heart goes out to the family of Rakesh Jhunjhunwala as well as Anshu Jain of Deutsche Bank, or erstwhile Deutsche Bank, who passed away. Rest in peace, both. A bunch of conversations as usual lined up today. You'll watch out for Gautam Shah. We'll talk about the technicals. Hiranand Savlani will talk about Astral, and Rupen Rajguru of Julius Baer on Where Do Billionaires Invest. Thanks so much for tuning in today, people. We will, at some point of time, also talk to Mr. Ramesh Damani during the day today on his proximity and his affinity for Mr. Rakesh Jhunjhunwala, and what does Ramesh Damani make of all the interactions that we've had with Rakesh Jhunjhunwala. That's a special tribute from our end to the big bull in India. And we thank Ramesh Damani, of course, profusely for agreeing to talk to us on that. Viewers, thanks so much for tuning into this very long trade setup today. Have a great day ahead and stay safe.